Hey traders, happy new year and welcome to this week's episode of Weekly Forex Forecasts. As per usual, please like, comment and subscribe for more if you like the content. Let's get right into it. So as always, we're going to be starting with the Dixie, and as usual, we're going to be starting with the weekly time frame. Okay, so what do we know? We know that this was our last break of swing structure on the weekly time frame. Okay, we also know that if we draw our 50% level, that we've already tapped into the discount area. Okay, and since tapping into the discount area, we've broken internal structure on the weekly time frame. So this is one of the clearest and first signs of potential bullish realignment. Okay, now since then we've tapped into this weekly extreme demand zone. Okay, and since tapping into this zone, we've seen a pin bar and a considerable reaction, I would say. Now currently price has tapped into this weekly supply zone right here. Excuse me. Now there's no telling what exactly price intends to do from here. It's possible that if we look at this candle on a lower time frame, what we're really going to see is that this supply zone is only facilitating a pullback, perhaps for a possible continuation. But we don't know that for sure. So what do? We scale down to the daily time frame and we take a look at what's happening. Now, if you've seen the previous videos, you already know that this was our last break of swing structure on the daily time frame. Now, don't worry guys, we've started a market series, a market structure series. Okay, I'm going to be adding the link up under this. I'm going to be adding the upload to this video, top right corner. Make sure to check it out, and by the time we're done with this series, you should be able to map structure in a mechanical way. Okay, the same way I do it. Right, so we have a swing break of structure here on the daily time frame. We know that we've been in a pullback for a while. Okay, currently we've tapped into this weekly supply zone, and it seems as though it's actually an overlap zone. Okay, because we tapped into a daily demand zone within a weekly demand zone. And what this demand zone did for us is that it's essentially facilitating the pullback, because currently daily internal structure is bearish. Okay, it's bearish, and the expectation is that we are going to see price, because we're already in the premium area. The expectation is that even if price gets all the way up here, we are going to come back down and take this low. All right, that is the order flow expectation. But currently we've tapped into this weekly supply area. Okay, I wouldn't exactly say that we've tapped into the daily zone. No, we haven't quite tapped into it. However, what we're seeing here is indicative of indecision, right? An indecision in the market. And this is actually why I prefer not to trade until the second week of January as a rule of thumb. And this is something that you could potentially adopt for yourself as well, because what this most likely is on a lower time frame is a range. Okay, and now when we're dealing with ranges, my advice is, if you must trade ranges, then try to stick to the extremes, and we're going to see what I mean in a minute. Okay, now if we take a look here, we're going to see that this break of internal structure on the daily time frame is actually the break of swing structure on the 4-hour time frame, owing to the fractal nature of the market. Right now, currently it means that this range is actually the 4-hour swing range. All right, we know that we're already in the premium area, and so far what we've seen is a break of internal structure to the downside, right? a break of internal structure to the downside. However, I'm going to tell you now for free, I don't like this sort of price action. I don't like the fact that the candle that initiated the internal pullback is the same candle that broke internal structure to the downside. All right, for me, that's not very healthy price action. I know the candle looks really good, but I don't like it, okay? But if we were to follow price action in a mechanical way, then potentially we could be looking to take a trade off of this 4-hour supply zone right here, okay? And as far as the internal range goes, this would be an extreme zone. So I guess you could potentially look for some high probability shorts from here to potentially target this low, all right? But keep in mind that the higher time frame expectation is that we're going to realign bullish at some point. But at the moment, we are bearish on the 4-hour, and the 4-hour internal structure is currently bearish along with the daily internal structure. So I would say that you could potentially look for some high probability plays from here. I also really like the fact that this liquidity has been swept at this point, and this doesn't exactly meet my criteria for a strong liquidation, but you could potentially look at this as a liquidation, all right? And then, but yeah, consider the fact that this is a range and be careful while trading it, okay? Now, if we scale down to the 1-hour time frame, what we're going to see is that this was our last break of swing structure at this point, okay? Now, currently, what we have is that it's actually very similar to the price action we have on the 4-hour, because this at this point was our last break of internal structure, and now we've broken internal structure to the downside. Okay, now you could treat that as a confirmation of the pullback. All right, it's a potential confirmation of the pullback, and the fact that we haven't quite tapped into this discount area here means that you could potentially look to play off of this 4-hour supply. And if you look carefully, there's actually a 1-hour overlap zone, and you know how much I love overlap zones. Okay, the reason I love overlap zones is because they're usually higher probability, so you could potentially play long probability shorts from here and into this discount area, keeping in mind that the higher time frame objective does suggest a possible bullish continuation given the higher time frame price action, right? So that's pretty much that for Dixie. Let's quickly move on to GBPUSD, okay? Now for GBPUSD, what we do know is that on the weekly time frame, this was our last break of swing structure, okay? What else do we know? We know that price has already tapped into the premium area. We also know that price has reacted off of this weekly supply zone, and we do know that we have broken weekly internal structure to the downside, which is a clear-cut and very strong sign of bearish realignment. Okay, so currently this is the range of price action that we're dealing with. We've tapped into this weekly extreme zone here, right? But currently, if you look at this bit of price action here, you're going to see what does look like a range, because within the past 3 weeks, we haven't exactly made any substantial move to any one side. And this is the reason I say it's usually important to try to wait, okay? Try to wait and see what happens, all right? So, yeah, let's just scale down to the lower time frame and see what exactly we're dealing with. All right, so remember, this is a weekly supply zone. Now, if you look at this on the lower time frame, for the first time since we actually started the weekly forex forecast series, we've finally seen a bearish realignment on the daily time frame, okay? Because we know that this was actually our break of daily swing structure, all right? And since this pullback began, we've seen the first break of internal structure to the downside, signaling a potential realignment. But again, if you look at this bit of price action here, it does look like a range. So I'm not too keen on trading this particular bit of price action until, say, 2 weeks into January, okay? But if you are looking to make certain plays, my advice is whenever you're dealing with a range environment, stick to the extremes. That is my advice, okay? Now, on the 4-hour time frame, you know that this was our last break of swing structure, okay? This was our last break of swing structure, and we knew that this was our last break of internal structure, meaning that we broke internal structure to the downside at this point, okay? Now, what that potentially means is, well, we're still within this range. It's not the cleanest bit of price action, okay? Because we haven't exactly seen 4-hour realignment that satisfies me personally from this discount area, okay? We haven't exactly seen that. The closest thing that we have seen is this change of character. Well, there was a change of character at this point, right? Now, potentially, you could treat this as a strong liquidation and an immediate failure of supply, which for me is usually a very high probability model for taking longs, all right? Vice versa for shorts. So yeah, you could potentially look to play longs from this particular range of 4-hour price action here. It is a potentiality, but whatever you do, my advice is stick to the extremes, okay? Stick to the extremes. That is my advice. If we look at this, we could potentially call this liquidity. We can say that this is a 4-hour supply zone, okay? So yeah, we could potentially look to take a trade from this extreme zone, but be very careful and don't swing for the fences, okay? Don't swing for the fences. Again, we could potentially look to take a trade from this flip zone right here. Now, the reason it's a flip zone, as we already discussed many times, is because it's the last demand zone that caused a failure of this supply zone right here. So that's exactly why it's a flip zone. You could, and I would consider it an extreme zone. So you could consider playing longs from here or playing shorts from here, whichever happens first and whichever most aligns with your plan for executing, right? So let's quickly move on to Euro-US dollar. So for Euro-US dollar, in the weekly time frame, we know that this was a break of swing structure. All right. We also know that we are already operating within the premium area. All right. Now we know that we tapped into this weekly supply area. And we know that we've broken the internal structure to the downside. So this is as far as we know. So which means that currently we're dealing with this particular range of price action right here. We have tapped into this refined extreme weekly supply, and we've seen a pain bar and a considerable reaction. Now we could mark out this particular weekly demand zone here as perhaps potentially on the lower time frame facilitating a pullback. We don't know. So let's just scale down and see what we're dealing with. Okay, so just like on GBPUSD, this is the break of swing structure on the daily time frame. Why? Because the market is fractal, right? So now the thing about Euro-US dollar at the moment is, while we did see an internal realignment at this point, we did break internal structure to the upside at this point. Okay, I think we treated this in our last video before the end of the year. I think, I'm not entirely sure, but I think we did. All right, so at the moment, internally on the daily time frame, this is the range of price action that we're dealing with. We've already tapped into the discount area and into this weekly supply area. Okay, now I don't really see price as having tapped into any particular area of interest on the daily time frame. We haven't tapped into a demand zone, and we haven't exactly tapped into this fair value gap that that we have here. Okay, but another thing that does worry me, just like on GBPUSD, we can see this clear indecision candle here. So my advice is, this is most likely a range 1, 2, 3, 4. Okay, 4 days in a range. My advice is, yeah, just stay out if you can, or try to play the extremes if you have to. Okay, so this daily break of internal structure just so happens to be the break of swing structure on the 4-hour. Again, the market is fractal. All right, now we could potentially look at this as a strong liquidation, right? I would consider it a strong liquidation. It's a good sign that price has immediately caused a failure of supply to the upside. Okay, so we could potentially be looking to make a play from this 4-hour demand zone here for potential high probability longs. But that is really as much as I would say at the moment. Again, be very, very careful. Risk as little as you can. Don't swing for the fences, because we are most likely in a ranging price environment at the moment. All right, that's essentially that for that. If you made it to this point, thank you very much once again. Please like, comment, subscribe for more if you like my content. And yeah, just have a great one. Safe trading, guys. Bye.